Okay, thank you for tuning in. Today is Tuesday, July the 7th, and in this video, I'm going to cover an adjustment I made to a vertical spread in the SPX, and it is now 0 DTE. All right, so let's take a quick look at the activity tab that I have here. We'll go to um, the relevant contract, which is SPOOS. And yesterday afternoon or morning, rather, let me do yesterday. I put it on at 10:20 a.m. Pacific time. I put on an out of the money put spread for $1.50, and the strikes were 75.05. This is the one I bought, and then I sold the 74.95, which is $10 away from the one that I bought. All right, so that's simply a vertical spread. I guess you can call it a bearish put vertical, and I paid $1.50 for it. Currently worth about $4.80. So one adjustment, and note that yesterday this contract was a 1 DTE, so 1 day to expiration. And note that let's go to what I did this morning here. Okay, so roughly an hour after the open, as the market was dropping, I decided to make an adjustment to the vertical put spread that I had on. And what I did was I converted it into a butterfly. And to do that, I sold the 74.95 and I bought the 74.85 for a credit of $415, so $415. Remember, the multiplier in this booth is 100, and the multiplicand in this case would be the price I was trying to sell it. So I paid $1.50 for this spread yesterday, and then I sold this one this morning for $415. So that leaves me with a credit on the trade of $265. Yeah, 50 to 15, 65. So $265. And the analysis of graphical representation of that particular setup, where the current structure is the following. Let me remove the non-relevant contracts. So we'll do that. And it looks like I just got out of it. All right. So I had an order to sell the butterfly for $250. Note that we're about
Order partially filled.
and I'm working something else on IB. So we're less than an hour to go to the close, and right now the market's trading basically at the center of the butterfly. So if it were to close here, it would close for full value, because the long end of it, the 05 to 95, would be worth max value of 1,000, and the 95.85 would expire worthless. So I collected 1,000 in addition to the $265 I have of credit. However, I don't know that the market's going to close here, although it's looking like it's going to pin in this area, judging by the volume that I see shaping up across various strike lines. So for example, if we look at the 75.05 strike line, we see there's a total volume there of roughly 137,000. At even strike line, there's 77K and 144K. So there's roughly 221,000 volume. And then the next bigger strike line, or let me see what we have here. The 95 has about 111,000. So this is a shorthand way. I'm not going to attest to the accuracy of pinning within an hour based on the sum of the volume of the relevant strike lines. But again, I don't know that it's going to pin here. Nobody does. So I was working in order to sell this butterfly for $250, I believe, and I'll verify that in a minute. So originally I bought the 05.95 for $1.50. I sold the 95.85 for 315. So I'm sorry, 415. So that gives me a credit of 265. And then I just sold this butterfly for 250, I believe. So that's going to give me a total of 515 in credit. And the let's verify the fill. Okay, so 250. So again, 250 credit, 415 credit, and a debit of $1.50 leaves me with a profit on this of 515. So not bad. I captured 50%, a little more than 50% of the max value of this butterfly with a little more than 50 minutes to go, 53 minutes to go till the close. Now, of course, if it pins here at 95, I'm going to miss out on the $485 that extra that I could have captured, but I don't know that it's going to pin there. And furthermore, I still have an hour or 50 minutes to go, 50 minutes and change to go. So it's possible that I might still do something within the last 10 minutes, create a box or sell a butterfly if I can get the right price, but I doubt that's going to happen today based on the VIX. But anyway, getting back to this structure, that was what I would consider a decent way of dealing with this butterfly. Again, the original position was bearish vertical spread that I bought yesterday morning for $1.50 when the market was near the highs. And I basically did the trade because I was expecting some sort of pullback, and take that with a grain of salt. Not a prediction on the market. I was just looking at the activity, the market activity, and based on what I saw, I was okay with paying $1.50 for this vertical. At the time, the O5 was probably trading around, it's probably about a 20 delta, I'm guessing, somewhere near a 20 delta. So 10 wide butterfly would probably be trading, given the time of day, for roughly around $1.50. That's just back of the envelope math, and I was fine paying that price. Moving on from there, having this, I decided to, when the market came into this area, into this zone earlier today, I sold the 85.95 put spread for, as I mentioned, 415, and then that left me with a butterfly, which I just sold off for 250. And since I sold it, it's probably going to pin here just to look a bit annoying. Yeah, I mean, let's say that you had several of these on. Remember, I had just one contract on, so one butterfly. But if you had several of these on, and let's say you had 5 to 10 of them on, you could sell half of them, sell a few of them, make a decent profit, and leave the rest for the value of the pinability value. So if you think it's going to pin here, then yeah, leave some on and get as much as you can on whatever you have left of the total position. But given that this was simply a one lot, I was okay with taking the extra 250, leaving me with a total of, let's see, it was 265 plus 250. Yeah, so $515 profit on this particular setup. All right, that's going to be it for today. I'll catch you guys next time. Thanks for tuning in.